was at a recent innovation summit, and the conversation was obviously about disruption, the pace of change, and one of the real themes that emerged out of it was transparency, that businesses need to be ready for a new level of transparency in the way that they do business, in their customers' information, and that is obviously very true in your industry. As we just saw in the last session, the sheer volume of data that will be available is going to change the way customers think about you and you think about customers. This next session is called Harnessing the Power of Data Analytics. It's going to be led by Ken Lindharsen, and each of his panelists are going to make a presentation. Ken is Vice President of Accident Benefits and Bodily Injury for Desjardins, which has got to be one of the best titles ever. I assume they mean bodily injury benefits, not just actual bodily injury, but who knows? He is a big guy. He's, you know, he would be your man for sure. He's also, I just want to make note, founding and current board member of the Canadian National Insurance Crime Services, or CANADICS, and so he's obviously got a broad range of, or a broad lens on data and how it can be used, and I'm going to turn it over to Ken. Please join me in welcoming him and the panelists.
Thank you, Amanda. Yes, I'm responsible for accident benefits and bodily injury, so all of those accidents that happen. I'm also responsible for the Special Investigations Unit, so you can understand and appreciate my interest in a subject like this. So it's an honor and a pleasure to be with you here today and to be the moderator for today's session, Harnessing the Power of Data Analytics in the Insurance Space. Amanda's taken away a few of my important kickers, but that's okay. Touching on the fact that data combined with analytics is a great opportunity for insurers to improve and enhance the way that they manage fraud. And we know as we look forward to the fact that the availability of data, both in terms of internal sources as well as external sources, combined with further enhances and improvements in analytics, provides even a greater opportunity for insurers to utilize the combination of that data and analytics in how we combat and manage and deal with fraud. In terms of today's session, we will talk about that. We will also talk about and explore some of the current industry practices, both in Canada as well as abroad, and look at what the future may hold while exploring some of the business and privacy risks associated with the use of big data. Now I'd like to introduce the panelists, starting with James Colasso, who is a partner at Monitor Deloitte. James leads the insurance strategy and operations practice at Deloitte and has over 13 years experience serving and advising financial services clients on strategy, customer experience, distribution, operations, and overall transformation. And James is a specialist who focuses on the P&C insurance industry. Today, James is going to talk about the evolving role of data in insurance, looking at the evolution of data in insurance in general, not just from a fraud perspective. So, welcome, James. Next, we have Ben Kosick. Ben Kosick is the CEO of the Canadian National Insurance Crime Services, otherwise known as CANADICS with a C, not to be confused with the organization that is sponsoring the Wi-Fi at this conference. Ben preferred that I didn't use the name in the discussion so as not to confuse the two. Prior to joining CANADICS, he was a partner and data analytics practice leader at KPMG, and he's been involved in data analytics for over 20 years. Today, Ben's going to talk about the specific application of data in the context of CANADICS and how CANADICS is harnessing data to fight and combat fraud. Last but not least, we have Rick Haney. Rick Haney is a last-minute substitute for Frank Pinder, who unfortunately couldn't join us because he had an unavoidable last-minute scheduling conflict, so he sends his regrets. And Rick in his place. Rick is his boss, so I think we're receiving an upgrade today, so that's fantastic. We're pleased to have you here.
And I'll make sure I tell Frank that as well. You have this recorded, right?
That part if we can cut out of this so he doesn't see that, but it's great that you could join us last minute. Thank you. Rick is IBM's global leader for counter fraud and financial crimes, and Rick has spent more than 25 years in the insurance industry and is a member of IBM's Industry Academy based on his accomplishments in the industry. Rick is also a frequent contributor and speaker in the area of data analytics. Today, with respect to data with that focus, Rick's going to look at where fraud is, where fraud is going, and talk about what a global or holistic fraud solution could or should look like and some of the factors that need to be considered. If my math is okay, and I know there are a number of actuaries in here who will correct me if I'm wrong, the combined experience in this field of the panelists is just under 60 years. So I'm looking forward to today's session. In terms of the format, each one of the panelists has about a 10-minute presentation, and after that we'll open things up to a question and answer period. I'm sure there will be lots of interest and participation from the group, but in addition to hearing your comments and questions, we've also prepared some questions since I had an opportunity to look at the content in advance. Sound good? Yes? All right, let's get started, and I'll turn things over to James. And the clicker.
Hi everyone, thanks for having me speak today with you. So in my job, I have the privilege of speaking with multiple P&C insurance companies about the future of insurance. What does the next 10 years look like? And without fail, the topic of data and analytics comes up to the forefront. How can data shape my business? How can analytical capabilities prepare me for the future? So I'm here today to talk about the evolving role of data in insurance, how it will change the nature of your business, and how it will hope to simplify, drive an elegant experience and sort of drive more impact for the customer interactions that you have every day. So traditionally, insurers have relied on internal data, customer-provided information, government sources, and credit reports as sole sources of information for risk assessment. But more recently, geospatial data has been incorporated into business processes. So underwriters, for example, are using it to better understand the extent to which, say, a property sits in a floodplain, or its proximity to a fire hydrant, or perhaps a visual means to better understand concentration risk. Auto telematics recently been introduced in the marketplace over the last 5 years. Data such as a car's location, its speed, its acceleration, its braking, coming from a device plugged into the car, from your mobile device, or going forward from an embedded sort of capability coming out of your car is very much sort of out there and prevalent. But all of the data that we're talking about today is very much what I would call structured data, meaning that it's organized data. It fits in a relational database and relatively, I would say, straightforward to analyze. So what we're witnessing now is a rapid uptake of new data sources that are becoming more readily available and more prevalent in this industry. The major contrast here is that unstructured data will sort of be the norm going forward. Now, unstructured data is data that's not organized. It tends to be text heavy. There's some dates and some numbers in it. There's photos, videos, multimedia. And this raises a number of implications for carriers that will need to ingest, to manage, and to derive insight from this data. So to give you an idea of how rapidly this landscape is changing, approximately 90% of global data that has been created in the past 2 years, and 80% of that is unstructured data. So what this means is pricing models, segmentation models, analytical models that were once solely driven by internal data and traditional data sources can now be fueled with tremendous sources of external data that's unstructured from be it social media, multimedia, online research, news, weather patterns, behavioral purchasing data, et cetera, et cetera. So the proliferation of third-party data is in fact reducing insurers' need for that internal data. So with respect to specific sources in the next few years, insurers will collect all these types of information through applications that they currently have in their roadmaps today. So first notice of loss claims applications, call center handling applications, claims adjusting applications will all give you this type of data. Social data derived from social media, is currently not a core focus for many insurers. I would argue it's one of the more interesting sources of data out there. There's a lot of attitudinal data, behavioral data, demographic data. That's just vast. and everyone sort of posting it up there, I think there's a wonderful opportunity there to consume that data and to derive real insight about the sentiments of your customers, the motivations of your customers, and how to better serve them. So limited use of these data sources right now across this industries, but early adopters have aggressive plans to augment their traditional data sources. Device-generated data, sensor data from the Internet of Things. So as companies continue to move forward on their telematics or usage-based insurance programs or leverage smart home technologies, which we haven't seen a lot of here in the Canadian marketplace, we can expect the use of sensor data to be far more prevalent going forward. So everything's moving away from a static framework. Historical data used to be used to predict future losses, but we're moving into this more sort of custom approach that's specific to individuals. We'll be able to have enough data to be able to understand risk at the individual level, and ultimately apply that to a really dynamic environment where the lines between past and present will be blurred, where we can take real-time empirical data and take preemptive action with that data. So technology obviously is a catalyst for the revolution we're living now. The availability of data, the ability to process that information, to run models and to take action, all in real time, coupled with the learning element of AI, are key drivers to this dynamic environment. Now, of course, this framework incorporates the use of unstructured data, pictures, sound, etc., that add color and information. So imagine a world where insurers have the ability to understand, based on real-time advanced analytics of empirical data, when and how an accident, loss, or fraud event might happen, and playing a preventative role in that loss. Now, in an ecosystem that's going to include driverless cars, semi-autonomous cars, various sensors from various devices, insurtech suppliers, insurance carriers have a central role to play in this, in facilitating what that business model looks like. So if you look across the insurance value chain, just to bring this to life a little bit, there's countless areas of where this can apply. UBI, as I said, usage-based insurance, already causing a ripple in this industry, but only begun to transform the industry. Still remains relatively new in the country. So let's reimagine value-added services as one example. So car maintenance, once you have an embedded accelerometer in the car and a GPS device, and these will all be sort of embedded in cars through 4G capabilities sort of emanating from your car going forward, you'll have the opportunity to alert your customers that, say, the vibration pattern in your car suggests it needs rear-end alignment. Roadside assistance, we noticed your car just broke down and we have called a service vehicle. It'll be here in 5 minutes. Geofencing services, alert notification, your teenage driver in your house just crossed over a provincial border. Proactive and preemptive risk advice or interventions. So IoT applications can help mitigate specific risks or offer coverage at the point of need. So for example, a sensor could shut off the water supply in your house when it detects a leak in one of the pipes, saving your basement from any kind of water damage. So social data, interestingly, has actually been used by a few carriers here in Canada. I just want to point out. So we're on the cusp of seeing new and interesting things in the marketplace. ICBC here in BC has made use of social media in tracking those who have made large or suspicious claims. This is public data. The ICBC noted how some who claim to be seriously injured cannot resist bragging on social media what they're able to do despite their debilitating injuries. So one woman, a hairdresser, claimed she was so severely injured she could not return to work. But on Twitter and Facebook, she not only revealed she went running and hiking, but she had joined a roller derby team. And so described as a rising star in this sport, she portrayed herself as a hard hitter and received a lot of injuries on the roller rink. But of course, when confronted with this, she settled her claim for about half of what she was originally seeking. The Fort McMurray catastrophe is another clear example of how social media has changed disaster response. Following the mandatory evacuation in Fort Mac, residents, officials, and Canadians were all looking to social media for updates on, the news and to stay apprised of the situation. Twitter feeds, Facebook groups, trending hashtags, there was no shortage of, fire and insurance news via social media. A leading Canadian insurer used their social media strategy to ensure that customers were safe, that their customers were safe, that they were informed, that they were reassured that they have a trusted place to seek advice and support. And they used Twitter and Facebook Messenger as a means for more complex and private questions that customers had. So great examples there, and this is an exciting start. But as we move to a more dynamic environment, insurers will be able to incorporate other sources of data, historical weather patterns, news, research reports, again, social media as calculations of risk from potential catastrophes to price coverage, to offer value-added services, or even to validate optimal levels of reinsurance. So, data is a foundational component of the next generation insurance carrier, no surprise. But yet few organizations have fully invested in the talent, the platforms, processes needed to develop a sustained capability. Now, traditional structured databases and governance, in place are limiting the use of unstructured data, forcing, I would say, big data into small data. So data ingestion, management, and analysis must be treated as a strategic discipline. So there's a few capabilities I've laid out here. Real-time processing will become, I would say, critical as digital platforms evolve. Advanced analytics capabilities, insurers have always prided themselves in, hiring actuaries. Now they're looking at PhDs, statisticians, data scientists, equipping them with the best tools, the best beanbag chairs to solve complex, bespoke problems. Data management infrastructure, arguably one of the more important points up here. Technology is evolving, infrastructure is getting cheaper and more accessible, and easier to implement. So, there's opportunities to leverage cloud and open source technologies here to get into this game. Data governance, of course, is critical to ensuring that data is managed efficiently, that there's no duplicative tasks within the organization, that you have sort of the right operating model to ingest this data and to manage it. Connectivity and telemetry, having that capability to tap into the Internet of Things for cars, for homes, for lifestyles of your customers. And finally, artificial intelligence and machine learning, will help you to create those sophisticated models, those platforms that can be leveraged to better serve your customers. This is accessible. Platforms like Google's DeepMind, IASD, SIGOPT are all good examples of being able to provide these machine learning capabilities at competitive prices. So there's a level playing field, and technology has enabled that for all insurers to enter this market relatively quickly, relatively cheaply. And at some point, as we've heard today many times over, the pace of change will accelerate. And some will be ready, while frankly others may not be ready. And those that choose, I would argue, to make the right investments and analytical capabilities today are those that will write history in the industry. Thank you.
Thank you, James, for some interesting insight into the increased availability of unstructured data, some of the opportunities it presents to us as an industry, and some of those key capabilities that we need to develop in order to optimize or maximize its use. So thank you. Ben?
Presentation going? There we go. Afternoon, everyone. Ben Kosick here. I'm excited to be here to talk to you about a topic I'm very passionate about, and that's using analytics to stop bad people from doing bad things. I'm going to tell you a little bit about Kinetics before we get into the analytics underneath it. So Kinetics was formed in 2013 as a not-for-profit by the insurance industry. It was developed to focus on organized and premeditated fraud. It's an organization that's open to all insurers. Right now we have 9 members that represent 75% of the direct written premium in Ontario. We're in Ontario only right now, but looking at expansion across Canada in our future. And the focus is using state-of-the-art analytics to identify potentially suspicious behavior, which we then offer as an alert to our members so that they can choose to investigate or not, and ultimately drive costs out of the system and improve road safety by reducing stage collisions and other types of bad behavior. So really it's about helping insurers focus their limited resources on the right claims. It's a little bit of overview as to the kind of process behind the scenes. So we gather data from all of our members in the policy category, claims category, and some SIU-related data. We also pool data from third-party sources outside of the membership. And all of that gets put into a database behind the scenes upon which we do the analytics. Now, the analytics are done basically by the machine. There is no human intervention, and one of the things I'll talk about as we go through this panel session is privacy and some of the challenges that we can have when we're aggregating large amounts of data. And so this was important that there be no opportunity to go phishing by people in the solution, and it's really the machine that does the analytics and spits out the alerts. And so these alerts then go off to the members and give them a sense of kind of why the machine thought this was suspicious, and allow them a much greater contextual understanding of that claim in context of other things, and I'll explain that a bit more. One of the things I like to point out is this type of solution has been implemented in other places around the world, but here in Canada we've taken it to the next level. The broadness and richness of the data that we're using, as well as the ability for the individual insurers to access the alerts and look at that context has gone beyond what's been accomplished elsewhere in the world, so source of Canadian pride. So with data analytics, there's all sorts of techniques that can be used, and I think it's really important when you're looking at your own organization and what you're trying to accomplish is to pick the right technique. We've started focusing our initial work on what we call social network analysis, or network analysis. I tend not to use the word social. People automatically think Facebook, which automatically gets me in trouble. But network analysis or link analysis. And it's a very powerful technique that connects people, places, and things, and gives you that broader context. So we can see all the places where a cell number was used, or a vehicle was involved in an accident, or a tow truck may have shown up, or the same witness. And so, of course, the broader and richer the data set is, the better that context is. So a very powerful technique, one of many that's available to analysts out in the space. So the next big piece of the puzzle here for Kinetics is the richness of the data. So by pooling data across insurers and adding data aggregated from outside through third-party sources, the objective here is to expand that context, to provide a truer picture. And while Kinetics approaches it as a consortium play with more of the same data, if you will, this type of gathering of data that James referred to in the different sources allow individual insurers to broaden their observation space, to broaden their context, and get a better picture of what's really going on. So it's not just specific to a consortium style. But the idea here is with a small sample of data, you're really looking through a keyhole. When you get the broader data across time and across insurer or with third-party data sets that you can acquire, you get a better picture and you know where to focus your resources. So generally the first couple of questions I get hit with when I speak about this topic is, well, what about privacy, Ben? We're pooling all this personal information and you're sharing it, and how do you do that? So one of the things I want to talk about is that you shouldn't be afraid of doing this type of aggregation work using the big data and the analytic techniques because of privacy. There are ways to use an appropriate privacy framework to achieve many of your objectives. We worked extensively with FISCO and both the Privacy Commissioners of Ontario and Canada, and what resulted there is that we changed the OCF and OAF forms to include language that says you can pool, analyze data, share the data for the limited purposes of suppression, detection, and prevention of fraud. So those are now, since November of 2014, are in the standard form. So all insurers and all companies, not just Kinetics, can leverage that consent language to do more with fraud. And with PIPEDA, there's always been a little more latitude in work done in the fraud space in terms of what you can and can't share. I can spend a lot of time on privacy, often do, but if you guys have questions later on, I'll be happy to answer them. With Kinetics, one of the things that we did is we took a very strong privacy approach from the beginning. So rather than figure this out afterwards, we started at the very beginning in what we called privacy start from the smart from the start. We've gone and worked with the commissioner, and we've been awarded the Privacy by Design ambassador status, and more recently there's a new certification program out of Ryerson for the Privacy by Design certification, so we're one of the first companies to get that certification as well. So it shows that you can do this type of pooling of personal information in the fraud space, certainly, and be respectful of privacy law. Critical success factors, not a lot of time to do all of this justice, but a lot of things that you need to focus on, and this goes with any analytics initiative, not just fraud related, but having a strong data governance structure in place is incredibly important. You got to manage your data sources, the quality and completeness of them. Privacy and acceptable uses have to be dealt with, both from a commercial perspective and from the privacy law perspective. You got to decide whether you need 100% accuracy, or do you need indicators of direction and kind of strategic information. So if you're auditing to your financial system, then you got to make sure that it audits. If you're looking for market information, then and one of the things that we do in Kinetics is we match individuals. And so do we need 100% match? Not necessarily, because there's a subsequent step of investigation that we can correct if there's a mismatch. But I'd rather match people and show a bigger crime ring than have to get it 100% perfect and miss that opportunity of identifying a ring. Selecting the appropriate analytical tools, I talked about that earlier. There's dozens and dozens of different techniques. If you pick the wrong, there's some are great for some things and terrible for other things. Machine learning's a hot topic, but there's many techniques, and you can often put a bunch of experts in a room and they'll spend 2 hours just defining what machine learning means. Picking the sourcing, skill management, incredibly tricky these days. I was at a conference where an HR person was speaking about something like a 200,000 person shortage of analysts in North America in the data analytics space. So it's a big problem, and it's a growing problem. The schools are trying to pump them out, but finding, retaining, managing talent is a tricky thing. Operating model, this is really important. I'll come back to this later as well. It's important that you embed this decision making into your processes so that you're actually enabling action. Without action, that insight is useless. If you generate great reports and people look at them and go, that's interesting, we haven't achieved much. So it's important that whatever analytics you're putting in place are actually embedded in a way that drives action. And lastly, ongoing measurement, tuning. We're up and running now for about a year, and we're getting feedback from our members. We're looking at ways to improve, both by adding new data, by improving the quality of the fraud model, and it's something that is a never-ending journey. Fixing your data sources, getting the data quality, getting the right model. You shouldn't expect that that's a one-and-done type activity. Similarly, examples of success. These are some anecdotal stories given to us by our members. I love the first one, auto theft. This is just shortly after we went live. We generated an alert. The investigator looks at the alert, said, "Yeah, this doesn't smell right." It was somebody had reported their car stolen, so investigator phones up the person, has a conversation with them. The next day, the claim is dropped. The day after that, the car appears on the driveway, and all is good, right? So sometimes this is about just getting in front of the fraudster, letting them know that you're onto them, and sometimes it's easier for them to sort of drop that particular scheme and try and go do it somewhere else. We've identified a couple of vandalism rings where high-end cars are being repeatedly vandalized in a couple of specific body shops. A couple of our members have reached out to other members and started to collaborate. They've reached out to the Insurance Bureau of Canada with the ISD organization there, and have started to work with police and prosecution. So that's the way this model is intended to work, foster the collaboration and improve our ability to catch the bad guys. Auto theft ring, similarly, we helped in the identification and ongoing analysis of a couple of rings. And policy fraud, lots of places where we're identifying, because we have all of the data across all the insurers, across 75%, we're able to identify where the same fronting address is used for multiple policies across insurers, and identify that kind of fraud. As a wrap up, before we get into questions and answers, I think Kinetics is a great example of how the insurance industry can harness the power of analytics. We're doing it. We're on a great journey, providing value to our members. It is an ongoing journey. We're using analytics that are generating insights that would have been impossible a few years ago. I mean, if you think about this social network analysis or the link analysis, if you think back to the old cop shows where they had the pictures on the wall and the strings connecting people, this is what we're doing here, except in a really high-speed, automated way. We're identifying the relationships between people, places, and things, and we're looking for the ones that don't fit the normal business pattern, or what you'd expect in a non-fraudulent claim. So it's an ongoing journey. We're looking to add new members and their data to broaden our context. We're looking at other geographies, which would also broaden our data. And there is a lot of drift in terms of people and fraudsters that go from jurisdiction to jurisdiction. We're looking at third-party data sources. We're adding some Dun & Bradstreet data to strengthen our corporate information and our supplier information. We're adding data from, from HCI, which is a health claims processing system in Ontario, to strengthen our provider networks and do a very interesting provider peer group analysis. We're looking any ways to improve the quality. That's a journey that we work with our members and identifying gaps and places we can fix some stuff. Ongoing tuning, and of course, lastly, and as I said earlier, something that's really important is helping the members turn these alerts into action and to actually drive benefit. Thank you.
Thanks, Ben. Impressive that we were able, you through Kinetics and the group, to get the industry together. Can you imagine how difficult it is sometimes to even to get 75% of the industry together in one room talking, never mind agreeing with the direction they want to go and the role that they want to play? So I think a great foundation that's been put in place, and you've talked about some of those important elements, continuing to look at how we can improve the model and how we can make sure that insurers are utilizing the information that comes out of that model in order to capitalize on the benefits. So thank you very much. Our third panelist, Rick, I'll turn things over to you before we jump into the question period.
Thanks for the opportunity. So I'm going to try to pull some of these thoughts together into specifically talking about fraud and how to use data to confront and fight fraud. I think a lot of the discussion today in the various sessions is focused on customers and customer centricity. And as you're listening and looking at some of the things I'm going to talk to you about, think about it this way. The fight against fraud is really the opposite side of the same coin as customer centricity. At the end of the day, it's a study in behavioralisms. You're trying to identify anomalies, and in this case, you're trying to stop those anomalies that appear to be doing bad things. But it's the same sort of thing, just in a complementary way or an inverse sort of way from what you do with customers, which is try to understand their behaviors, look for anomalies, and look for ways of capitalizing on them within your market. Fraud historically has been an acceptable cost of doing business. I've been in this industry for a long time. I've been leading this fraud team for about 3 years, but prior to that, my entire time was in the insurance industry, half of it with IBM and half of it before IBM. And we always accepted fraud as a cost of doing business. You ask anybody anywhere in the country, or North America or the world, they're going to tell you fraud is somewhere between 15 to 20% of incurred. You roll it into your rates, you set up your token SIU, life is good. The problem is, it's not so good anymore. The frauds are getting much more complex. We're seeing frauds, go beyond simple policy fraud and slip and fall claims and such, to complex events where the bad guys are hacking into your systems, resetting your systems of records, or putting sniffers into your environment to listen for your wire or financial movement instructions, and figuring out how to capture that in a record that they try to introduce into your business to get paid off of. They're recruiting your people, your adjusters. I guarantee you some number of your adjusters are involved in some way, shape, or form in a collusive ring. Not on every claim, not all the time, but in some degree. We find very interesting cases. We found one case where commercial risk was a tour bus operator, and he was using a body shop to submit claims. He was running a race car team on the side and using the profits for that from the fraud to run his race car. Turns out his adjuster, the adjuster at the insurance company, was his navigator. He was running a rally race car. And so they were approving the claims. And so you find these collusive networks popping up very innocently. It took a long time for us to convince this company, by the way, that this was actually going on in their business, because they didn't want to believe it. Complex schemes are more prevalent now. It's no longer an acceptable cost of doing business. If you take a look at not only the direct cost, but the operational costs and the customer brand impact, it's far greater than 15 to 20% of incurred. We have a hard time measuring it. We don't want to admit it. So we just kind of accept it and move on. But the reality is it's a more significant impact on your business than most organizations are willing to accept or think about. And then finally, your customers are expecting more. They're expecting you to protect them. They're expecting you to be there for them. We've seen surveys where one of the biggest increases year to year in a fraud survey done a couple years ago in the UK was the number of people who were reporting insurance fraud that they weren't the victim of, because they care. They realize that this is impacting them. So these three things are driving a new world. As you look at your organization, we also see that fraud is usually sort of an isolated group within the organization, counter fraud or SIU or whatever it is. What we're seeing more and more of is we need to fuse together fraud with security and operational risk. They need to come together because the data, the behaviors, and the outcomes are basically looking at the same things from different sides. So we want to see this convergence. I mentioned earlier the hacks. We're seeing cases now where frauds are being committed by hackers hacking into the organization and changing the underlying systems of record. One recently in the banking industry, they hacked into about a dozen debit card accounts, and they reset the amount that a person could take out against that debit card to an unlimited value. And then they fabricated those debit cards and sent them out all around the world, where people withdrew $45 million worth of cash against those accounts. Now just ask yourself, in your business controls, do you ever challenge what the system of record says? If you go to validate coverage on a claim, do you ever validate whether that policy is real or phony? We're seeing it also in the supply chain area, where, and defense contractors, the hackers are coming in and creating bogus supplier records that they can issue POs against. So these, again, are becoming much more sophisticated. This is just a high-level chart. I found it kind of interesting. It applies in our fight against fraud. This is what's called the ODA, or the OODA loop, Observe, Orient, Decide, and Act. This was developed by Colonel Boyd of the Air Force in 1950s in the Korean conflict. Our fighter pilots were defeating their adversaries, but our pilots had inferior equipment, and they wanted to understand why. And they found that when they studied the behaviors of these pilots, they did things better than their adversaries in the area of observing their environment, orienting themselves in it, making a decision, taking action, and having that be a feedback loop. We did that better. And so now you can take this model and say, when you're trying to defeat an adversary, I could argue that the fraudsters are better equipped than you are. They don't have to deal with regulation. They don't have to deal with collusion. They don't have to deal with data privacy. They don't have to go through RFPs and procurements and ROIs. They just do what they want to do. And they're using the technology that you can't afford to buy, or that your organization won't authorize you to buy, to be able to do what I'm saying you need to do: understand behaviors, look for gaps. So this allows you, if you apply this properly, to use data to create a large observation space. Ben talked about the observation space. Expand your observation space. Orient is nothing more than applying today's analytics to understand what's happening in that observation space. A lot of the networks that Ben was talking about are put together based on analytics. Then make a decision, and then take action on that decision, and then have a feedback loop back so you can do it better the next time. So it's just an interesting model. If you're curious about it, you can Google this on the web and find some very, very interesting thoughts around the OODA loop, and it really applies in the fight against fraud. Now, when we look at an enterprise fraud program, this goes beyond an SIU. And for the insurance companies here that have their fight against fraud manifested solely in an investigations unit, you're missing the boat. Unfortunately for you, the fraudsters probably are not missing you, because they're at heart very lazy. They're going to find the weakest targets, and they're going to go after it. And just like the example of the car showing up in the driveway, as soon as you put up a barrier that shows a more difficult approach, they're going to go someplace else. But until you're the weakest link, they're coming after you. It's the old adage, that if 3 men are fishing in the woods and a bear comes upon them, do you have to outrun the bear? No, you just have to outrun the slowest guy you're with, right? And that's how it is with the fight against the fraudsters. As long as you're putting yourself out in front and faster and a little more challenging to commit fraud against, they're very lazy. They will find another path that wouldn't involve you. So when we look at an enterprise program, it starts with prevention. This is knowing who your customers are. This is identification and validation, who has the rights to do what they're doing within your environment. Detection is using analytics in a real-time capacity to understand what's happening at that point in time and make a decision when a decision is still relevant. Don't pay the claim if there's a suspicion of fraud against it. Hold it for a second, take another look at it. Respond is how you take on that response. This is not as simple as it seems. You don't want to hold the claim if it's your CEO's son who had the claim, but some fraud analytic flipped out that said, hey, this might be fraud. You need to look at data to decide how you're going to respond. You can apply that in the commercial lines as well, right? You don't want to deny a claim against the CEO of a carrier or a customer of your commercial line business. In the discovery side, we're looking for patterns and anomalies. We're looking backwards, we're looking retrospectively, we're looking at the aggregated body of claims, of policies, of producer appointments, of checks, things that will give us anomalous behaviors, okay, and start to identify when something isn't the same compared to its peers. And then investigate is how you can quickly confirm suspicions. When you take these areas and you start to look at where data comes into play, right, in detection, we want to use massive amounts of data, identified and unidentified data, to be able to come up with predictive models that help us understand when something doesn't look right. In the response, we want to use internal data to understand the customer, the centricity of that, or the value of that customer, so that we make a decision about what we're going to do. We have it, thought through. Discover, obviously, is looking for, again, massive amounts of data, internal data mostly, in terms of the behavior that the individual trying to create a claim against you or buy a policy from you compares to in their peers. And investigate is, where you're going to look through all the social media and Twitter data, the person who was Roller Derby, I think it was. That's where you're going to find this. So different places along the way, you can use different data. It's not a blanket statement that says, wow, big data, all big data for all things. Break it down into the use cases that you're looking at. But this, I could spend a lot more time on, but gives sort of a framework of how you look at fraud. Look at approaching counter fraud in your organization. This is sort of a repetitive to the points earlier. We're really not using unstructured data sufficiently. And everybody always wants to talk about privacy. That's the right thing to talk about, but just think about all the data that you have in your organization that you're not touching. Just think about the pile of adjuster notes. Think about all the clipboards of notes that your commercial underwriters have taken out in the field with them, right? Think about the media and what's in the media that you can harvest from. If you have a bank associated with your business, go talk to their Know Your Customer KYC folks in their AML compliance area. They got massive amounts of information that's unstructured that you'd be able to tap into. So don't get hung up on these privacy things. Just think about the things you can use that doesn't require privacy. Last example here. We talk about unstructured data, and you have to the biggest challenge we've had with it is understanding context. What does a word mean in the context of the sentence in which it's used? The same word can have different meanings, and we've really struggled with content analytics to be able to understand context. Now that we're moving into the cognitive era, we're able to understand context a lot better. And I'll just give you an example. We had an insurance company who issued medical insurance policies, but they didn't really follow a standard form. They had very unique causes and provisions and coverages, policy by policy by policy. When a claim came in, the adjuster was taken forever to sift through all of that to figure out what was covered and what wasn't. By bringing in, today's era, what we used in IBM was Watson Explorer. There's maybe other things out there as well. We're able to understand the context of the words in that pile of documentation, highlight them, bring them to the adjuster's attention immediately, and allow them to more quickly settle a claim. Just think about, your adjusters today being constrained, your investigators being constrained because they can't read enough. This allows them to be more effective by pre-reading, if you will, and highlighting the things that they should be looking at. So just some thoughts here as we wrap up. Digitization is the new thing, but it is a lovely thing if you're a fraudster, right? Because if you think about how you did business in the past, a policyholder would come through a broker or an internal captive agent, and they would never, ever, ever see anything about your rating or your scoring or anything. We are now putting that out there for the bad guys to be able to, discover your policy thresholds, your rating thresholds, your limits where policy premiums go up. If you aren't careful, you're going to create an opportunity where you're the victim of underwriting fraud and on a massive scale, because once somebody figures out, hey, by the way, if you go to, I'll pick on a company, Desjardins, if you go there and say, hey, you know what, if you have 5 speeding tickets versus 4 speeding tickets, there's a break point there, your premium goes up like 30%. I'm making this up, of course. But if you now know that as a policyholder that that's the threshold, maybe you forget about that 5th one when you're filling out your application, right? So that information will be shared and it'll be used against you. So be very, very careful in this digitization era, because it exposes your business to the people who want to do you harm. Unstructured data can accelerate investigation. The link maps, the monitor your watch list, a lot of the stuff that you're seeing with Kinetics, bring it inside as well. Everything that Ben talked about that you're doing through Kinetics expands your observation space. But you can also bring your own data into this as well and expand that network and make it even more impressive. Context is king. That's what I was talking about earlier. You have to understand context. We can read text, but do we know what it actually means? And the last point may be a little controversial, but hire some millennials. They think about things differently. They approach things differently. We've been doing this in IBM for about 3 years now, but we call it consulting by degree, and we're bringing millennials in and infusing them into our consulting business because they approach the problem space so different. They understand how things work differently than you do. And it can be a real refreshing set of eyeballs on any of the problems you're facing, especially in this area. So I think that's it for me. And turn it back to you. Thank you. Appreciate it.
Thanks, Rick. I consider myself an optimist, but after listening to some of your stories about the level of sophistication, I have to admit that I was a bit discouraged. Thank you for switching gears and talking about some of the solutions and showing us that it is a light at the end of the tunnel and not an oncoming train.
That's correct.
Thank you. On that note, we'll open things up to the question period. We do have some questions that I prepared in advance, but I'm sure there's lots of comments or questions from the audience that we would love to hear. So please don't hesitate. I'm not sure if there are any mics in the room, but it's probably small enough that if there are, okay, perfect. There's runners at each side of the room, so.
They don't have to be good questions.
Any question from you will, of course, be good. Yes, we have a question in the middle there. Competition to see which runner can get to you fastest.
I'll address this to James, but maybe the others will wish to comment. At the end of your presentation, I was thinking, so does the machine just spit it out? Or is there human synthesis, input, judgment about how that data was used to reach a certain point?
Yeah, great question. So I believe there'll always be a need for humans. Humans need to run this company. But where the machine becomes interesting is where processes can become expensive to be run by humans. And so I think the application around, let's say, advice or around fraud prevention can be quite interesting if you apply machine learning and AI techniques on the front lines to be able to offer robo-advisory capabilities, fraud prevention capabilities in real time. Depending on sort of what line of insurance we're talking about, those interactions can become quite expensive depending on what kind of service delivery model we're talking about. And I think machines can absolutely play a role to drive those efficiencies and arguably maintain or enhance that customer experience.
We have one technology as a company we just recently acquired that's an AI-based solution in the fraud space, and it combines both. It scans the data and looks for the signature of a fraud transaction or a transaction scheme materializing that it sees in the data, and it learns to recognize what they look like. But then it surfaces it up to a fraud analyst who then has to interpret it, confirm it. The machine will suggest rules that could be interjected into the fraud detection engine, but the human has to look at those and decide, yes, those make sense, no, they don't. So it makes the human about 1 billion times more effective because there's no way they could find those fraud signatures. So from our view, it's a combined view, especially in fraud.
Yeah, we have another question.
Good afternoon. That was a great presentation. Just a quick question around how law enforcement is receptive to using this new technology when it's handed off to them in their own investigations.
So right now, the way we're working in our current model is that we're providing some of the leads to the Insurance Bureau of Canada that's historically has the mandate to coordinate the ring behavior and working with police and prosecution. So these alerts become another form of input to them, consider it a tip, if you will, and then they start to work the cases and attempt to have a consolidated, standardized way to approach police and prosecution with the bigger crime rings. We're looking at all sorts of different ideas for gathering stuff, whether it be police reports or the accident reporting center or MTO. I mean, there is no shortage of data sources out there for Kinetics and for yourselves to use to help you fight fraud. So we want to build some of that in the future. It's just a kind of a measured pace that we're on right now.
One of the challenges that we face that this type of technology helps with is getting court time and getting something through the prosecutors to the courts. Similar type of technology that Kinetics is using, we use in crime fighting as well. And we find that when we're able to package a case around the type of data that they'll be assembling, you have a better shot at getting the prosecutor to take it on because they don't have to, figure out quite as much and they can see it very clearly. And we found that has helped quite a bit.
Question in the back.
So I guess first, James, I'm glad you think that humans will be needed in the process going forward. So there's some comfort in that. So my question is, you talked a lot about the cost of fraud kind of on the back end. What do you think the cost of fraud is on the front end in terms of like application fraud? Like what's the value on that piece?
I don't have any benchmark data to tell you what it is, and I can't even tell you that the industry, when I talk to folks in the industry, have a view of what that is. I would have to think that it's somewhere in the same order of magnitude in terms of your written premiums. It depends a lot on what line of business you're in and what distribution channels you use and how you expose it. But we just see a lot of questionable behavior within the producer community. And, it's real easy to understand what's happening there if you just do basic anomaly detection and you can start to see where things, you're either going to find producers that are really good and really good for a reason, which you want to promote and leverage, or you're going to find that there's really questionable behavior that you're going to want to try to identify and stop. When we think about fraud in insurance, most people still go immediately to claim fraud, but I think the underwriting and the distribution fraud is maybe bigger than claims, just because it's so hidden and so unknown. The challenge we have is measuring it. The CFOs, there's just really no good way to put a cost-benefit analysis on trying to get the savings against something that never happened. And you can say, well, I had this level of fraud and I dropped it down to here and now it's here. Well, where's your delta? Well, your delta's keeping it there, not getting it to there. It's something that we have to work with more in the industry to measure both on the front end and then across the board to establish, what the true cost is.
I think as digital platforms evolve on the front lines, as insurers sort of move sales and servicing over to digital platforms, be they direct carriers or, intermediated carriers, I think it'll just be a necessary solution that will be required on the front lines. And I think we'll need to look to different communities to solve that problem, like the InsurTech community. innovation hubs to find new and different ways to be able to solve a problem that probably isn't easily solved.
But by the way, it's the same, to do that requires the same solutions that you're using on the marketing side to track behavior. We use one of our customers is using one of our web tracking products to monitor behavior when they see fraudulent behavior. They remove the issue button off the underwriting screen. You can still buy the policy, but you're going to talk to somebody, but the issue button goes away when they start to see some of the flipping behavior that occurs. So you can use your same marketing investment in a lot of times to look for the bad guy's behavior as well.
I do have a question I'd like to throw to the panel. We talk about big data. I think if you look at the general population as a whole, I'm not sure they have a good understanding of what big data means. And are you concerned, are there any issues with the public perception and the use of big data in insurance analytics? And I'll use a personal example that may not be representative. When Desjardins introduced their telematics program, Adjusto, about 3 years ago, it took me about a year to convince my wife that we were only using the data for the purposes of offering discounts, even though I was the spokesperson for the product and was adamant that we were using it not for any negative purposes. And now that she's finally using it, she's a convert, she tracks her performance. But what are your thoughts in terms of the general perception by the public of the use of big data?
So I don't think we need to worry about it too much. I think traditionally we would have thought that privacy was a big issue with respect to using big data. But I think about how many people trade off privacy for a better experience, for a more personalized experience. Just if I want to log into a website and I want to take a shortcut rather than enter my username and password, I click the one button Facebook to share my information, and I get a better experience. I think that can easily be applied to insurance carriers leveraging data about you that's out there in the internet to better learn more about you and to be able to offer you a better experience.
Gentlemen, something to add?
So I agree with you that I think things are changing and perceptions are changing. But also I think that there's still enough people out there with concern. And I think it's not about necessarily complying with PIPEDA and being compliant with the law, which you have to be, but it's about understanding where your customer base is with their perceptions. So I was being shown some technology where I could scrub Facebook and grab relationships between people and then ingest that data into the solution and then use it to detect suspicious behavior. And it's just something that, as I talk to people, I want the public on our side. I want them not thinking that this is big bad insurer trying to deny their claim, that we're after the bad guys. The moment I step into that space and start grabbing Facebook data, which they might not feel good about, I have a different kind of an issue. And it's not a privacy issue from a legal sense, but it's a kind of a social perception. And so I think that's where you have to take stock.
And from my perspective, I think it's a convenient excuse not to try something new, to be perfectly honest. If we take a page out of what Jim talked about earlier about the preventative nature, you can scour big data sources anonymously and develop really good behavioral models, right? And never use the individual's name and never use it against them, but it's giving you that ability to come up with the predictive models and outcomes, especially if you commingle it with your known investigative outcomes. So you don't really even have to get into it. So number one, you need to look at where you're looking at in your process. If it's upfront building models, that's one thing. If you're using it specifically within investigations, for instance, or specifically by name within underwriting, then yeah, maybe you're going to be a little more sensitive to the privacy. So think about uses for it where it doesn't intersect with that need for complete, for identification of individuals to have an output. The second thing is don't limit your big data thoughts to social media. One of the more interesting big data sources that we're tapping into and using it across every industry right now is weather data. I mean, weather data doesn't have to be anonymized, right? It's weather. But it's big data because it's a massive amount of information. And we're using it in healthcare fraud to identify bad behavior of providers. So for instance, If there's a blizzard in a location and the roads are shut down, how come they're still issuing medical bills for services rendered on that day if they're not a hospital or a clinic, right? We actually found somebody doing that and supported a court case that actually kept a bad provider from winning an appeal. The other thing is hail. I mean, hail fraud is a huge, huge problem. But take the weather data that you can get to mine about hail fraud, both on a predictive and a reactive basis, commingle it with the social media data or the geospatial data, for instance. That's a huge problem that's just waiting to be solved, and you have all this weather data out there as big data. So don't be constrained by what we think about is social media and private data. Open the aperture.
Thanks, gentlemen. We've come to the end of our time. Any final thoughts, any parting words you want to leave with the audience? Any key messages? James, start with you.
I think the good thing is that I believe data is democratized. I think it's available to everyone. I think it's cheaper, to access. It's cheaper to implement and sort of manage within your organization. So, getting the data is not so much where advantage lies. I'd say it's how you use it. And I think there's a role for, all carriers to play and have their own source of advantage in how they use that data and continue to compete.
Great, thanks. Ben?
Sure. Big data analytics, it's a huge opportunity for insurers to gain competitive advantage. I think with respect to privacy, consider it, but don't use it as an excuse not to do something. There's a lot of appropriate ways to structure it in a way that you can get value and get insight out of it. And lastly, on that insight, make sure, as I said earlier, that you set up your processes in such a way that you can drive action out of that insight, because that's the only way you're going to get benefit.
So from my perspective, I've been in the industry over 25 years. The last 4 years, I've had the privilege of working cross-industry. I've seen other industries, banking, health, public. And my view right now is y'all are behind in this industry. This industry is well behind where the other industries are in terms of their commitment to fighting fraud. And right now, you're the slowest fisherman in the run against the bear. And that's not a good place to be. And as you move forward with this digitization and bringing more of your business online, all you're doing is putting raw meat out there to go along with it. And it doesn't end well. So
On that gloomy note.
Thank you. Thank you, gentlemen.